All right, guys, I wanted to give a brief update on the SPX since we closed the monthly for April, because this is, if you're wondering, what's happening with the market, is it going to be a recession? Is it going to be a crash? You want to watch some of these charts at major time intervals. Let's say, end of month, check in end of month, even end of week if you're watching a particular trend to see what's happening. So let's just dive in. So we've got obviously the very long term. So the SPX, for anyone who might be new, is the S&P 500. It's a fund that tracks the S&P 500. So you can just use it for, you can buy it, but you can use it for watching the charts. So obviously super long term, decade long trend, up, and up. And you can see that this trend has accelerated in 2020, right? So this move, something like this tells you like an acceleration of the rate of change suggests that there will be an exhaustion at some point, right? So the acceleration of the rate of change, how this goes up steeper than this over here, suggests that there's going to be an exhaustion, right? But we don't know when exactly. We can't necessarily time it. Well, I mean, you can time it with some TD sequential, but we won't get into that for now. Okay, so let's take a look at what's happened recently really quick. We've got our yellow box around this candle because this candle was the bearish engulfing candle. And so we have been watching to see if we break the low of this candle, which we just have, okay? Which we just have. So April has closed below our yellow box, closed. So this is, in our minds, we're thinking bearishness, which might not be any surprise based on what's going on in the news, I guess. But let's see. All right. Let's go to weekly level. That's what we want to do. All right. Weekly level looks a little messy. Just ignore for now, and I'll walk you through it. Right. So we have our yellow box. This is the same yellow box we were just looking at, and this is the close last week. Close below it. End of the month. Close below. You can see we got a little close below here, but we pushed back up over on this side. I think this is a stronger close. I think this is going to continue down for a couple of reasons, okay? So let's talk about them. Firstly, we have this move down to here, and that gives us a chance to do some Fibonacci retrace so we can see what's happening. So Fibonacci retrace from here to here. This move, we retrace. This is the kind of opposite of what I usually show on the screen because this is going down instead of up, right? So the retrace goes up, and you can see it goes perfect into that 61% level. It wicks into the zone here between 61% and 76%, but it closes below 61%. So that level held as resistance in this case, since we're going down, and we rolled over. We have a 21 period moving average crossover of the 50 weekly moving average, right? So bearish signs. We break through that yellow box, that candlestick support, and just general support, previous swing high. And we're broken through it. Okay, so where is it going to go? Okay, well, the next support level, you see a zone here, right? So this is a zone between this swing high and that swing low, and I just have also a blue line here just to kind of highlight that. But interestingly, this is potentially an ABC pattern, which I've talked about before, which is when you have a correction, you have basically what happens is you have so you have a leg which is A, a leg which is B, which is the pullback, the retrace, and a leg which is C. What you can do to estimate that C, and I've talked about this before, is measure the A leg and extend it from the point of B. And the interesting thing is that measurement brings us directly into this support zone, right? This support zone, which is right around 39.50. So let's say 39.50 to 4,000. And you can see how all these things start to converge, where we have that support zone level, which is our estimate for the ABC. We also have our Fibonacci extension, which is the 27% extension target, right around that same area. And we have our 100 weekly moving average, which is now in that zone, which will potentially roll over slightly as it kind of slowly sort of corrects from the drops that's been happening. So might roll over slightly. All these things are going to coincide to give us some kind of support. The question then becomes, does it bounce? Does it hold from there? Giving us, I don't know, another bullish move upward in the longer term pattern, or does that support break down? Now, if we get a bounce and we get a move into another leg, I think we're going to be moving into the potential blow off top pattern. So, a potential final move before everything comes down into a crash or a recession. And that, that bounce would potentially give us that, and we would move up into some higher levels, sell off really quickly, and we get a blow off top, and we get potentially a big wick on the monthly or quarterly chart, that sort of thing. And then the crash happens, recession happens, whatever. If this support breaks down, it's going to obviously continue down, and we have previous levels around 3,500, right near the 200 weekly moving average. And then we just keep, sort of staircasing downward. So if the recession is triggered now, the crash is happening now, we're going to go down to 3,500. If it goes further, we just keep going towards this longer term trend line. That longer term trend line. Now, here's the thing. If at any point in time we break that trend line, which is really steep, remember we've talked about steep trend lines, and we also have that acceleration here. If at any point in time all that structure breaks, right, and we break the trend line, we start moving into like this zone, this is crash zone, right? We start getting on the other side of the 100 monthly moving average, or maybe the other side of the 200 monthly moving average. That's real bad zone. But that's, speculative for now. But you can see on the chart that if we start getting into, this area here, this is just going to potentially spit down. Because here's the big thing. This is similar to the Bitcoin conversation about going to 20K. We have this previous level of 1550, right? This previous resistance level, which we broke in 2013 and never retested. We never retested. Now, it's not necessarily that's always going to happen, but a technical chartist would keep that in the back of their mind and say, hey, we never retested this level. So if we get some sort of crazy Lehman type crash again, you might see just a dump, and that's going to be a major level, a magnetic point potentially for price. So if real bad things start happening, that's something to just keep in the back of your mind. Okay, guys, I think that's good enough for now. So again, shorter term, we're watching for this C leg of the ABC corrective pattern to complete and to see if this support level, the support zone, holds. And if we get a bounce and start moving into a new bullish leg before a crash or recession happens, or maybe this comes back up and gives us a double top, right? Kind of a double top over here with this, and that becomes the rollover pattern into a crash or a recession. Cool. SPX, S&P 500 guys, quick update. And thanks for the support. Give a follow on YouTube, Chart Daddies on Twitter, Cash Daddies on Twitter, and talk soon. Peace.